Good afternoon. Welcome to the Business Broadcast. My name's Nikki Larkin. I am talking to you today about how to make better, safer decisions. If you haven't attended one of our broadcasts before, please do feel free to say hello, ask comments, ask questions, post comments in the comments section. We're happy to take questions as we go along always, and we try and fit as many of them as possible because it's very important to make sure that this session is relevant to you and your business. So what am I talking about today? I am talking about how to make better, safer decisions. In particular, to ensure that you've got good bookkeeping in order to make those decisions. Now, sometimes people don't realize how important those basics are. And it really annoys me because good bookkeeping can make or break a business. So I'm going to talk today about how you can tell if your bookkeeping is good, how can you improve it, and why. If you are a manager in a business and not your own business, just re-emphasizing why these things are important so that you can understand. So I'm going to particularly be focusing upon why cash is the most important measure. Now, I run a business. I run a few businesses, in fact, and I can tell you that having cash in the bank or not having cash in the bank or worrying about how the next set of bills are going to be paid, that is the difference between you sleeping like a baby or not sleeping. And it's incredibly worrying to be worried about how our bills are going to be paid. And as the owner of the business, it's ultimately your responsibility. So I'm going to talk about how we can prevent that happening so that we can see much further out, what we can do, also mitigating things. What can we do if cash falls short? Now, you can do all of these things and still things can go wrong. So you just need to be ready with people that have got experience so that you know how to address these things if they happen. So why is cash the most important measure? Because lots of people are very excited about saying, oh, how many millions they've got in their revenue, or they even might be saying about how fantastic their profits are. Now, don't get me wrong. It's great to be growing your business, seeing higher and higher revenue. It is certainly an indicator. More importantly, I definitely would argue that the profit growth is important. In a growing business, it does fluctuate. So you may be sacrificing profit one year for investing in future profits. Profit is incredibly important, especially in mature businesses, and you need to really get a grip on that. So, for example, in my business, we've stopped measuring on revenue and all of our quarterly targets are now all focused upon profit. However, profit doesn't always mean cash. So we really do need to look at how cash is affected and how can we ensure that you have got the sufficient cash to run your business. So I will be talking about that list later. Also, please do stay tuned to the end as I have got 3 really good key performance indicators that will hopefully keep you on the straight and narrow so that cash doesn't become a problem. Now, I'm going to say hands up. I am a very ambitious business owner. I love having growth. I've grown my business well. Some people think I've grown it really well. I'm still frustrated about, I'd like it to be even much bigger and better than it is. However, I am now at the point that I am trying to really concentrate on the profits. That's really important. And it's growth. So it's the quality of the work and also ensuring, therefore, that we have really good cash. Because I know what it's like. it's horrible. If you are worried, if you know you've got a bill coming in that has to be paid tomorrow and you're not sure where is that going to come from, you're probably thinking, oh, it's okay, I'm going to get that paid because XYZ Limited's going to pay. But then it doesn't happen. Or you've arranged a loan with the bank, but actually it's taken much longer to go through than you expected. All these things happen in businesses. Even the most successful businesses can be killed due to problems with cash. So we're going to look now at how to measure your bookkeeping quality, because from that you hopefully will be able to understand what your true cash position is and also be able to do accurate forecasting. So bookkeeping. Often people see it as the poor relation to accounting. No, no, no. Bookkeeping, extremely important. It is much harder to find a good quality bookkeeper than it is to find a good quality accountant. I have seen some shocking bookkeeping over the years. Sometimes that bad bookkeeping has destroyed businesses. Not my team, obviously, but it can do. And I'll tell you why. So, for example, a business owner may be looking at their accounts from the books that the bookkeeper has prepared for them. If they aren't looking at the right things, they may have in, for example, debtors that are never going to be paid, or have they got invoices duplicated so it's all inaccurate? There's lots of different things that can be distorting your numbers, where you may think you have a profit and therefore everything's all tickety boo, but it isn't, because some basic bookkeeping rules have been broken. So firstly, what I'm going to look at in the bookkeeping is the sales ledger. So hopefully you have a process for raising your sales invoices. You then also should hopefully have a really good process at chasing in those invoices. Ideally, if you've got some sort of system set up where you send out the invoice, it automatically gets paid via direct debit. Brilliant. Or you may have a system where people pay in advance. Again, fantastic. Really, really helps your cash flow. However, the majority of SMEs aren't like that. They haven't got their invoices on direct debit, or they aren't billing things in advance. And therefore, they've got to rely upon those invoices being paid in a timely fashion. And unfortunately, also with SMEs, it becomes a bit of a chain reaction. If they don't pay, if their invoices haven't been paid, they can't pay their suppliers, and it becomes a nightmare scenario for the managers of that business. So it's really good to have a really good, thorough review of your accounts receivable. Now, people call this different things. It could be you might in your business call it your sales ledger. It might be just your billings. It might be your list of invoices. Doesn't matter. It's all the same thing. Essentially, looking at what are the sales invoices that you've issued, how many have been paid, and what's outstanding. A really good indicator is looking at if you know what your average turnaround of payment is. So, for example, if you give your client customers 30 days, if they've not paid within 30 days, it's going to up your average. So having average debtor days is really useful, because then you can spot in your business if suddenly, when you see you might, for example, get this on a monthly basis. If you see your debtor day average has gone up, say, from 30 to 40 days, you need to investigate and find out why has that gone up. So firstly, do have a regular good review of your debtor book. Really understand, are those invoices in there valid? Are those clients going to pay? If they aren't paying and they're overdue, find out what the issue is. Is it because, like I've said, perhaps they're in a chain of they're waiting for their customers to pay? But if they do, have that conversation, keep in touch with them. But ultimately, if they continue not to pay, then you need to put a process in place. Now, there are processes in place. Ultimately, you can put CCJs on them and all sorts. Hopefully you don't want to get into that situation. It's very rare that we ever do that. We've had to do it twice. Unfortunately, you've then still got to go through the process of enforcing the CCJs. So it becomes really difficult, and it's taking your time out of the business. Ultimately, you want to have a really good credit control system, making sure that those invoices are set up and are going to be all paid well. So review that process. I remember once, years and years ago, I was working in a very successful business. It was a listed company. I went in there. Within the first month, I found there was £1 million worth of sales invoices that should have been sent for expenses, so rechargeable expenses of the consultants, that hadn't been sit. That's £1 million just being held up because people were being really slow with the process. So I redid the process, made sure those invoices started going up much more frequently, and get that cash in, because that's dead money. If you're incurring expenses on behalf of a client and you're not invoicing for them, you're just causing more problems in your cash flow. So really do have a look at your sales invoice process and then your sales invoice credit control process. So that's number one. Number two, in the purchases. So this is where I've had this in my business. Our hands up, accountants, of course, they're going to be, well, we put our clients first. So we're doing their accounts, their bookkeeping first. So, and that's in fact why I've now outsourced my accounting, because I want to make sure that I have my reports on time and I'm looking at up-to-date information. So for example, if your purchase invoices haven't all been put on your purchase ledger, you could be naively thinking that you're a higher profit than you are. That has hit me, not with huge amounts, but some amounts, a few times. And that is awful, because then you're thinking, right, that's fabulous. I've got £100,000 profit. I'm going to forecast that I've got another 100,000 or whatever. And you make decisions based upon that. But if you have got invoices that haven't been posted, then that can just cause problems. So you want to make sure that your purchase ledger is fully up to date and that you've put them on. Another thing that I see, which is shocking, is, and it's not my guys, but I have seen in other businesses, duplicate invoices. Now, sometimes this can be deliberate fraud, people putting things through. Most likely it's carelessness. So what I recommend you always do on a regular basis is get supplier statements and reconcile them. You do not, cash is so precious. You don't want to be paying a bill twice when actually you've already paid it. You only need to pay it once, but it's been posted onto your ledger twice. So I would recommend, it's provided you've got the time, certainly with your key suppliers, reconcile their statements on a monthly basis. If that's too much, then quarterly or yearly, but preferably on a monthly basis. So I'm just turning off my phone. I hadn't realised I hadn't turned off my phone. So apologies to a client that's phoning at this moment in time, but I will have to call back. So yes, so what was I saying? So yes, but that's a really easy thing to do. In fact, when I did my very first accounting job when I was 14, my role was in the summer holidays to reconcile supplier statements to invoices to make sure that the correct balances were in the ledgers for this particular company. Really, really important job, because that's very easy leakage, especially if you've got a supplier that's got that sends you hundreds of invoices. You want to make sure that you've got a clear process to make sure those invoices are correct, and you're not having leakage, and making sure you're only paying the right things. So that's making sure that you put in really good controls in place in your purchase ledger. You may also want to put in a purchase order process so that you only pay invoices that have got your purchase order recorded. Also, more checks and balances to make sure that you have got sign-off process to make sure that you've had the items delivered, etc. So what's next? I've got a question come in. It's come in from Guy. Do you think making tax digital would drive improvements of the quality of bookkeeping? No, unfortunately, I don't, Guy. The reason why is making tax digital means that you'll be doing you on software, and you have to do it more regularly. However, I've seen hideous mistakes, just as many hideous mistakes on people that are doing stuff on software than as they do if they were doing paper ledgers. So I think, unfortunately, the only thing that's going to be happen with making tax digital is the taxman gets paid more quickly. Unfortunately, I don't think will have any impact on quality of bookkeeping. Obviously, if you do engage and decide to outsource it to somebody that does have good quality checks in there, then absolutely, then things can improve, but it's unlikely. The final thing that I wanted to cover today on the measuring and bookkeeping quality is reconciliations. Now, it sounds boring, and I am so frustrated about the amount of people now that go, "Oh, my software does that." I'm sorry, the amount of times that I've seen software go right, whether it is QuickBooks or Xero or Sage, you still need to have reconciliations in place. If the software is all set up and it's all working well, the bonus is that your reconciliation process will be super quick, which is fantastic. However, I do see things go wrong. You see bank feeds go in, they have problems and it gets duplicates, or things get missed. I've seen where you've had the bank feed, but then people have posted manual transactions as well. You have to reconcile things. You have to reconcile to the bank. You have to reconcile to your HRC accounts. This sounds sorry, a bit boring, but it's reconcile. Reconcile everything. Reconcile your sales ledger. Reconcile your purchase ledger. Reconcile your PAY account, your VAT account, everything. And that's also, I saw there's another accountant which I read a lot on LinkedIn. She's a specialist in construction in Scotland, and it was she does write posts quite to the point often, and she was sort of dictating why does she charge what she does for doing a VAT return. Because obviously one of her clients had said, but doesn't the software do it all? Well, yeah, if you want to trust the software. However, what they're doing is they check, are things put through in the right VAT rates? Are they making sure that they're real invoices, not pro forma invoices? Are they making sure things have been put to the right codes? Are they making sure that there's not duplicates in there? And a great example of that is, stuff that we've had from our clients do their own bookkeeping. I've before had if I'd gone straight from their bookkeeping, for example, one that I did about 6 months ago. I don't do VAT returns very often anymore, thank goodness. But when I did, I always do pitching occasionally. And there was one that came in. If I had taken it from their software, they would have paid £32,000 on their VAT invoice, on their VAT return. However, I did lots of different checks and balances. What did they pay in their VAT return? 13 grand, because there were duplicates, there was all sorts of stuff missing. So if they had just trusted the software, they would have paid far too much in their VAT return. So for paying a few £100s for having your VAT return checked and made sure it's correct by a professional, they prevented themselves by paying £19,000 of VAT, which would have well, they did have quite a reasonable cash flow, but that would have been a severe impact in their cash flow if that had just been processed without any thought. Okay, I've talked a lot about bookkeeping. I could talk about bookkeeping all day because it's so important. And trust me, if you use an accountant that doesn't understand bookkeeping, get a different accountant. You need to make sure that your accountant understands bookkeeping, because if they don't, they won't spot the mistakes that can happen. Okay, so I'm just going to briefly, because again, this topic could be a whole thing in itself, but what to do if your cash flow is short. So, you might be you've got all great intentions to get everything sorted, but that something has happened and your cash flow is short. I go through a 3-point process in this. Ultimately, you don't want this to happen. Unfortunately, it does. It does happen. So, firstly, straight away, look at what's owed to you. Can you push through quicker some of the invoices paid to you? Are there clients on your books that you could get a deposit for? Are there people outstanding that you can chase? Can you offer a small discount by paying early, getting them to pay early? You might be able to get them to pay a whole quarter, for example. So that then fixes that cash flow. That does just move it. It doesn't fix it permanently, but it does help you in the short term. So that's the first thing. The second thing to do would be looking at whether you can either raise some capital or raise some debt somewhere. So can you get your overdraft increased? Now, typically, most banks, used to be able to just phone up your bank manager and say, got my VAT thing coming out. It's a bit more than I expected. Can you just push my overdraft up by 5k? Yeah, of course, Nikki, no problem. Those days are over. Very, very rare now that banks just do it like that. Normally, they want to see a cash flow forecast. They want to see the list of management accounts. It'll need to go to a credit committee, and you may find that you've got some facility and you've got that, but that is less likely now. So if you are looking and need to do borrowing and you don't want to be ripped off with really expensive borrowing, you need to be looking in advance. And I am coming towards forecasting in a moment. So you may be able to draw down on some facility that you've already got, but typically, if you want to borrow money, really minimum be thinking 2 weeks in advance to make sure it goes through. Realistically, if you want the best rates, you're usually talking at least 4 to 6 weeks. So that's the second thing. You might be able to switch things around. You might be able to get one of the other owners to put some money in, put some cash in. It depends what circumstances are. Third thing is your suppliers. So are there suppliers that you can negotiate terms on? Are there ones that will be, it's okay, I know that you're good for it, I will defer for a month? Or are there other things that you can look at? Lots of people over the last 2 years have been doing VAT deferrals with the HMRC. They're getting less and less amenable to time to pays. However, that is still an option. So do look at all the different things that could possibly do. But firstly, you want to see, can you get the money in so you can pay the amounts? Secondly, is there a possibility for either increasing your borrowing facilities or either getting capital or loans from the owners? And thirdly, looking at your your suppliers, seeing what you can negotiate. Importance of forecasting. I've only got a few minutes for this, but this is so important. Once you have reliable bookkeeping and accounts, you can then do accurate forecasting. It's very difficult to do accurate forecasting if you haven't got accurate bookkeeping. So we have a day-to-day cash flow forecast. We have it going out several months in advance. Work on every day, still juggling out. I'm so looking forward to the point when I'm hopefully going to be doing that on a weekly basis rather than on a daily basis, which we are forecast to do soon, especially now I've got my accountants in place too. But you really need to look at forecasting so that hopefully you're not going to have that horrible thing happen and you're going to have some panic and something that could interrupt your business. So there are various cash flow forecasting apps now, some better than others. I'm a bit old school. I still like the flexibility of forecasting on Excel. However, if you're not experienced at forecasting on your Excel, be very, very careful, because it's very easy to make errors in spreadsheets, and that could be very expensive to you if you do something. For example, if you put in some regular payment, if you've put it in as a plus instead of a minus or something really silly like that, that could completely kill it if you've just done some silly mistake like that. So if you are doing something on Excel, make sure you get somebody else to check it to make sure there's not any hideous mistakes in there. Okay, so top KPIs. I promised you at the beginning. Now, before I just say top KPIs, firstly, get a good bookkeeper. And secondly, make sure you have a strict timetable to get things in so that you know that you've got accurate numbers. So, what are my 3 KPIs to ensure that you can sleep at night and you'll be happy with your cash flow and you can make the right decisions? Because that's what this is about, understanding your cash flow so you can make the right decisions. Can you afford to hire that person? Can you afford to do that marketing campaign? Can you afford to go and get that new office or that new workshop? You need to really have confidence. And also, if conversely, also making the right decisions by having that up-to-date information, you can make those decisions more quickly to say, actually, I'm sorry, that person's not making my money. I've got to do something about it. Or that department's not making money. I need to diversify. You need to look and have accurate, up-to-date information so you can make those decisions. So my top 3 KPIs. 1, how many months cash flow do you have available? Really, really key, especially with a recession coming up. Some people may be predicting that a recession perhaps it won't affect you, but some businesses, it could perhaps, kill their business entirely. It could perhaps mean that your revenues suppressed by 50%, for example. But by knowing that you've got a certain amount of months cash in the business means you've got that possibility that if things like that happen, if you have huge dips, you can do something about it. And you don't have to do a knee-jerk reaction, because that's also the really important thing. Quick decisions are not always the best decisions. You want to have the right information because you want to be able to ensure that it's the best decision for the long term. So how many months cash flow? You'll find that lots of charities have to have a certain amount of months, and that's very good guidance. We've got an aim that we want to have 6 months cash flow in our business, and that's what we're aiming to get, and we're on track to be there by March next year. Not quite there yet. We're still working on it, but we've got things coming through. So that will be great. So then when we're into the recession, we can relax and we can, well, not relax because we're always working hard, but we can be then confident about the types of work that we take on and not because you don't want to panic and take on bad work. Second, your liquidity ratio, really important ratio. And we use it in many of our businesses that we look after with management accounts. So that is the money that you can easily get access to. So that's your cash, your recent debtors, any other sort of things like that, versus your immediate things that you've got to pay, your short-term liabilities. So things like your accounts payable, your tax bills. What you want to have, you need to ideally have that ratio as always being over 1. So, hopefully say 1.5 to 1. If you've got 2 to 1 or more, then happy days, really, really good. Thirdly, now remember this tip, have a very short month-end close. This was the first thing that I did. Not first thing. This was the thing that I did in my placement year. I was working for a multinational, and I managed to. US companies always like to have a really short close, and it's great because then they have their accurate numbers at their fingertips and can make decisions, and that's why they do it. It's really important so they can make and be agile and make decisions. My project was I turned the finance departments, reduced it from 3 days to 2 days. You think, what does it matter if it's 3 days instead of 2 days or vice versa? When you're talking about money and the flexibility to make every day that you delay a decision, that you delay doing redundancies or recruiting or investing in additional warehouse space, that's extra potential profits or losses that you are delaying. So you want to have good numbers at fingertips. So the third top KPI is the amount of days to close your month end. Have a target, have a service level agreement with whoever's doing it, whether it's someone internally or externally. So whether it's 3 days, 5 days, 10 days, whatever it is, measure it. If you're not hitting it, you need to be doing something about it because you need that information to make good decisions. Okay, I hope that's helpful and that's given you some food for thought. Please do feel free to contact me, ask any questions, because quite honestly, I've seen the lot. I've seen the businesses that have had problems and never managed to turn it around. I've experienced it myself when I've had to juggle around cash flow, and it's a hideous, hideous thing. And I've seen it where whole businesses have been majorly turned around. One business that we're involved with, 8 years ago, they were living hand to mouth. Now they've got huge amounts in the bank, now can be so much more relaxed about decision making. Really important. Anyway, thank you very much for your time today. Thank you for listening. Excuse me. Next week so hopefully you are going to be able to sleep once you sort all of that out. But if you still have sleep problems, we have the lovely Kim Searle joining us again next week, and she is going to go through some top tips on helping you to improve your sleep quality. Really helpful. Your sleep, if you have sleep deprivation, reduces your productivity, reduces your quality of life, reduces your IQ points. So cheerio, have a lovely, lovely weekend. Enjoy your July. See you next week. Cheerio.